Actually, it's Copper, not Cooper, by the way. That's all right. Well, while we're all kind of settling down, and before I kind of start my presentation, who here, and it's like 2022, right? As I'm going to feel dumb asking this question, but who has lost funds leaving it on exchanges or lending platforms here? Any show of hands? Yeah, you too. Well, look, I have to admit, I lost funds like that as well. And I'm the head of APAC for an institutional crypto custodian, and I lost my funds. Ironic, isn't it? Shame. Well, what if you were managing your friends and family's money? What if you were managing pension money or endowment money? Are you going to leave your funds on exchanges? There needs to be a revolutionary change in how this crypto infrastructure is being built. You see here, institutional investors are coming, or already came. They're already in this space. You see all these companies here, they're on Twitter, they're on media saying that they own crypto. And a lot of them are actually quietly doing this. So in order for these institutional investors to come into this crypto industry, do we service them with the same crypto infrastructure that has already been presented to them? In the traditional finance, you have custodian banks that holds the securities for investors. You have brokers that provide access to investors into exchanges. You have exchanges that matches trades for the investors. And you have clearing houses that settle the trades between custodian banks. Now, it took many long years and decades for the traditional infrastructure to build this thing out, where it has proper segregation of duties and lacking conflict of interest. You know, crypto industry in the beginning didn't have any of that. There were no businesses that became the custodians, they became the clearing houses. So it's no fault of them. But as these institutional investors are coming into this space, don't we need to provide them with a better infrastructure for them to invest in this space? In the beginning, US equities, there are about maybe 5% of the people who are investing in, institutional investors investing in equities. Now, it's more than 75%. In crypto, they're saying that there's going to be, in 10 years, there's going to be 60% of institutional investors trading in this industry. What we need to revolutionize in this space is bringing this traditional infrastructure into the crypto world, but give it a little twist because it's a blockchain. We are revolutionizing finance, aren't we? So this is where Copper comes in. So Copper has created Clearloop. Clearloop mitigates counterparty risk and increases capital efficiency. Now, what do I mean by that? If you're leaving funds on exchanges, obviously you're going to be exposed for exchange hacks or funds going down, financial troubles by the exchanges leading for your funds to go missing. But what we did at Clearloop was we created this product where we do a technical integration with the exchanges, whereby if let's say you're going to trade 10 Bitcoins, we'll lock those 10 Bitcoins inside your wallet. And we call it delegation, but we delegate or send information to the exchange saying that this client is going to trade 10 Bitcoins because it's locked inside Copper's wallet. Then the exchanges will acknowledge that and allow the traders to trade based on that balance. And again, this is a virtual balance. It is not an actual fund. And when the client is ready to settle the trades, because the exchanges leave funds with us, we can settle the trades inside Copper. Now, we're removing the whole blockchain element out of this, so it increasingly improves capital efficiency. You don't have to wait for network validations. You don't have to pay for gas fees. And you could do all this delegation within milliseconds. And most importantly of all, we mitigate the counterparty risk because we're not leaving funds on the exchange. Doesn't that sound pretty wonderful? But by means, we're not completely full on ready with this product yet. I mean, it has been launched, but we're trying to get more and more exchanges onto this platform. Let me give you an example. Recently, we had an exchange that was connected to our Clearloop ecosystem. I promoted this exchange heavily, and I had a lot of clients stake assets into the exchange, trade on this exchange through our ClueLoop solution. But when this exchange had financial troubles, they suspended withdrawals from all the clients. So if you were the client leaving funds on that exchange, then you wouldn't be able to get your funds back. But because our clients, our institutional investors, were using ClueLoop, they were able to unlock those funds and move it to another exchange for the purpose of trading. This shows how powerful this tool is because it's completely mitigating the counterparty risk that the clients are taking on the exchange. The client's funds are set within the custodial wallets and being able to trade safely without having funds touching those exchange wallets. And this product ethos goes across all our product lines. If you're trading OTC trades with brokers, we have the same concept. You can settle the trades inside Copper because we have the OTC brokers' funds within our platform. If you want to do staking, we have validator nodes that we run. So you can stake directly from your cold wallets into these validator nodes and earn the yields that will go into your wallets. A lot of clients now want to stake assets into smart contracts for DeFi platforms. We have a browser extension that allows your custodial wallet to directly connect to the DeFi smart contracts. So this removes the whole element of moving funds to a MetaMask or Wallet Connect, and then using those wallets to connect to those DeFi platforms. It goes direct from your custodial wallets. So I've been in the industry, in the financial industry, for about 20 years. I worked in proprietary investment teams in investment banks. I worked in a hedge fund for long periods of times. And when I came across this platform called Copper, I was immediately hooked. I knew this is way. I knew this was a gateway for trading crypto in a safe and secure manner. And I think Copper is paving the way. And for all the exchanges, the OTC brokers, and any platforms that are providing access to institutional investors, I welcome you to the ClueLoop ecosystem. Thank you. All right. I was gonna do some Q&A if you don't mind. Immediately cut my mic off. So I do have about 5 minutes left. So I was wondering, since it's a small group, I'm happy to take any questions if you have any. Yes, sir. Yeah. Okay. So this is a different security architecture that you probably some people are not used to. For our wallets, you know the concept of private keys, and if you don't own your private keys, you don't own your assets. But instead of private keys, we replace them with these things called shards using MPC technology. So MPC technology is multi-party computation. It's a type of cryptography that was invented back in the 70s. We repurposed this so we can replace private keys to these shards. And what these shards would do is that, based on this cryptography, it makes it difficult for one hacker to hack into one shard and get the information for the other shards so that it can piece it together. And with this, we can also scale, because if you think about multi-sig, that's usually used commonly in this space, you have to pay gas fees in order to create a wallet, and there's scalable issues because you can't make these multi-sig for every single blockchain that's out there. So we use this MPC technology so that we can scale. We have about 50 plus blockchain layers that we support, and MPC can scale that. And with MPC, as I mentioned, there's 3 shards. One will be held with the client, one with Copper, and one with a trusted third party of the client. And whenever you need to create a wallet, you go on a video ceremony where you have all 3 parties to create the wallet. But on a day-to-day activity, this trusted third party will take that shard and put in some private vault, so you don't have to interact with them, because it's always 2 out of 3 shards. Now, this goes into to answering your question. So what if Copper goes bankrupt or Copper's platform goes down? Then, because it's 2 out of 3, the client and the trusted third party can recover the assets for the client. So you don't have to wait for an administrator to come in, do a whole bankruptcy procedure to distribute funds to the clients. No. So basically, this allows us on a legal, and we do have legal opinions on this, that we're not, it's not on our balance sheet. So basically, it's not part of our bankruptcy estate. Going back to that, so let's say the client loses their shard or gets compromised, then Copper and the trusted third party can create a new wallet and then move the assets into another platform. So therefore, we're removing that single point of failure risk so that no one party is responsible for the entirety of the client's assets. Any other questions? All right, great. Well, thank you very much for your time.